All right, so 1 minute to the hour. My name is Kishan, but I go by the currency merchant on social media. I have no idea, but I'm not a big fan of TradingView. I do understand that it's what everybody's using, so I'm gonna use it. But the person that are not speaking, I'd appreciate if you'd mute your mic unless you're asking a question, so that doesn't take away from what we're doing.
July 7th, 1996.
Okay. All right, so what questions do you guys have? What charts you want me to look at? No answer.
Can you look at Jet1?
Sure. Here it is.
Cat.
All right, so top-down analysis.
Yeah, it's not spicy. It's not spicy.
Yes, it's not spicy, but can you mute your mic, please? Thank you. All right, so let's start. I'll take these lines off. And if you see me doing anything that can be done quicker, just tell me how. TradingView is not my strong point again. So let's start on a monthly chart. I have no idea what I have here. How do you clear everything off the chart?
Garbage can icon to the left.
To the left.
Left and bottom.
Thank you. Here.
Yeah.
Okay. Thank you. All right. So from a monthly perspective, this is DXY. It's been trading in a range. So this looks like a consolidation. If we zoom out, we can see where it's coming from. So this is the big picture. So it left here and started trading higher. So to identify where you are in the range, I'd start looking back. Admit some other guys. I'd start looking back at where it's coming from and where it's going. And that way we can identify if it's gotten to the drawn liquidity as yet. And if not, we identify the draw, identify where it started, put a fib on it and then see where we are in the range. And then that helps us in anticipating what to expect next. So if I zoom out a little bit more, and I look at this up here as the high of the range, this is a monthly chart, so put that up here. This doesn't mean that it's going to get here anytime soon. High of the range and low of the range. And I'm using the wicks here. So the highest wick, lowest wick, that's my current trading range. Now, when we left here, my idea would have been that price is drawing up into here. So I tried to find where exactly up here price would be drawn to. So that's when you start adding your ICT structure stuff. You're looking for your order blocks and all that good stuff. Put the fib on. Just put it all the way down here. So with that fib on, I'm looking at the midpoint of the range being right here at 95. Once I have this, I really don't need anything else. Once I have these levels marked out, I don't need anything else. Why? This is the high of the range. This is the midpoint of the range. We're not above the midpoint of the range for me to consider looking at anything here yet, because it's a monthly chart. So once we start taking these highs, then I start looking at back here for reference points that could be significant. But for right now, that's all I need. So that's it for the monthly chart for me. Then I go to the weekly chart and I start zooming in on where we're trading right now. So same ideas. This would have been a smaller range. I won't use full horizontal lines. I'll just use like the ray line. Same idea. IS high. And
Hey, buddy, use horizontal ray rather than that. It's easier.
sorry?
Use horizontal ray
Use the
rather
ray?
than this line. Yes.
Where is that?
Horizontal ray.
Here we go.
Go down,
Right.
yeah.
Thank
It's
you.
better.
All right, so, oh, okay, yeah, much better. Thank you for that. So when I do that now, I start looking at the highs in the range. Same idea. So this is the highest high, this is the lowest low. This is a weekly chart. So because large expansions typically start on the weekly chart, I want to know where we are in the range and where are the PD arrays inside of this range. So zoom up a little bit. This is the current market price. The closest reference point to the market price is the mean threshold or the midpoint of the range. It's closer to this line than it's to this line or that. So my focus is what structure is close to this blue line that I can use to key off of. So zoom up. All right, so what I see here is fair value gap here. Let's see if I can change the color to black. And I'm seeing that right there. All right, so this is what I'm looking at right now from a weekly perspective. This would have been the area prices join up to. There's also a high in here. So for liquidity purposes, I'm still bearish DXY, but there's nothing wrong with them taking liquidity here to pair orders and then drive lower. If that happens, then this becomes my long-term target going into 2022. What invalidates this idea is if we close above this high and then fill this imbalance completely. If it fills this completely, then I'm looking at higher. So I start looking at areas above this blue line, like this high. This is my first area that I'll be looking at if we fill this. This is an imbalance, so it can accumulate or consolidate in there for a while before it starts to push. But from a weekly perspective, there's nothing else worth noting except maybe this order block here. You get the shapes again here. Trying to find I think it's this. So then I'd be looking at these, just the bodies. Oops, persons are waiting to get in. All right, so once I have these marked out, there's really nothing more on the weekly chart I need. I'm not going to overcomplicate it and put a million things on. Now I'm on the daily chart. I'm just going to refine this. So this box was taken from the weekly chart and it's highlighting just the bodies. I'm going to refine it so it only focuses on candle bodies. So I'm going to put it on this one right here. And right below, right here. So I'm looking at these candles right here. I just refined it to that level based on the weekly order block that I drew. Now I start looking at structure. So what do we have here? Price traded higher into this high that was there from the weekly chart. Failed to close above it significantly. Then there was a drop. Short-term breakout structure. So because this is a short-term breakout structure, I have to start thinking that possibly this up candle right here could be a ICT bearish order block, and then that could be used to send price lower. If that's the case, then my rules are I don't want to see price close above here based on ICT order block strategy. I don't want to see price close above here. So I'm going to get my horizontal array again. Put it there. And then this becomes my order block. If this is my order block and this is a high, and this order block ran through this high before it broke down, I'm looking at this area as this is where stops were resting, and then the stops were taken here. So ICT has a video on YouTube that he did recently where he said structure is not it. There was a similar setup like this. So I'm going to remove this line now to refine, and I'm going to put a line on this high right there. So in my mind, based on how I understand it, this is the high, then the stops were taken here. Stops were taken there. If this market is bearish, we need to see a structure break, which would have been this low right here. So we can put a small arrow here to make it right there. Okay, cool. So this is my low that I'd need to see price close below for me to consider it a breakout structure. We have that here. Once that happens, I'm looking at this order block here and this order block here. So let's mark them out. Horizontal array. All right, so this is now my range of opportunity or my area of opportunity. If this was a FX, if this was a FX pair and I was trading, I'd be looking for buys down here and shorts up here. So that's my range to play in. Inside here, I wouldn't be really interested in. So based on what we can see here, we can see how price traded down into here. Then there was a huge reaction right up to this. So price is trading inside of this range now. So in my mind, we're going to be consolidating until we close outside of this area. So if I want to be bearish, I don't want to see price close above this green candle. And then if I'm bullish, it shouldn't be closing below this order block down here. So on a lower time frame, this area can be refined. Let's move this up a little bit. You can refine it on any time frame. And then once you have the refinement, focus on the time, and then you look at other pairs for reference points formed within the same time. And then that gives you setups. So let's drop now to a 4-hour chart. I don't know what I did that made these lines come up here, but they're there. And unless you know how to get them off, I don't. Let's make the lines a little bit thicker so I can mark them out. So this one, I think this can make it thicker. Okay, cool. And then this makes it thicker. So that's my range. Let's go 4 hours now.
Hey, buddy, right click. Right click. Let me tell you how to remove the horizontal lines.
Okay, right click.
Click on settings. Click click on that section break.
This one here.
Yes. Yeah.
Okay, thank you. All right, cool. So charts are cleaner now. So now we can look at how the setups actually played out. So before all of this happened, we could outline where the range of opportunity would be, where we wanted to see structure break take place. Just refine it right there. All right, cool. So there we are. So once this low gets violated, we're gonna look for this line here or any structure inside here that's bullish to support price going higher.
So is it that you find an area first that you want to do it with and then find a subsection within that area? And if it breaks the inside, you look if it's going to break the bottom part?
Look at it this way. Trading, when you're looking at a chart, is synonymous to hunting. That's why they're always talking about sniper stuff, sniper stuff, sniper stuff. So it's like hunting. If you're going hunting, you need to first identify where in the woods you're going to be stalking your prey. And that's where you start setting up your traps and then you wait. So with these two thick black lines, this is going to be my hunting grounds. I'm going to be looking for longs down here and shorts up here. Once I get there, this was taken from a higher time frame. So lower time frame is for one purpose and one purpose only, to refine your area. So you don't drop to a lower time frame and start changing direction. So you're bullish, but you go to a lower time frame and you see a lot of bearish order blocks, so you start looking for sells. You don't do that. Focus on, once you're in your area for shorts, refine where would be precisely the best place to short from, and that minimizes your risk. So if we go back over here and look at where that black line started, these are all down candles. So you can look inside here to refine.
May I ask a question, please? The black line,
Sure.
the last black line which you have put it, why you have not put it to the exact order block, the last order block, the last sell candle before the big up move?
So remember, this line was taken from here. Wait. We took that line from this here, which is the last down candle before the up move. So when you go to a lower time frame, now we're just going to refine.
Daily time frame. Okay, okay, fine.
All right.
Kishane, no, hold on, Kishane. Go down to the bottom of the page where you see October, September, and you see one little circle. No, down the bottom. Come down the bottom.
Here?
Yeah, I see. You see that little, yeah, click that. Yeah, that was straight up a chart for you whenever you're trying to refine, yeah?
Oh, all right,
Yeah.
thank you. So then I have to stretch it. Okay.
Yeah.
All right, so this is what the area that we're looking at. Down candle, up candle, playing inside here. Again, it's important to know that if we break this or close below this down candle, my bias changes. If I was bullish, my bias changes to bearish once this candle gets violated. Once we close above this one, my bias changes to bullish. So if you remember in the group, I was outlining this and I was saying that I don't want to see candles closing above here. So even though all of this was bullish, I think it was NFP, I remained bearish. I remained bearish. I bought GU, I bought gold, I bought EU, bought AU, and I sold UCAD. This is why. This is the first candle that went up there. It didn't close up there. So while this was happening, based on my rules, I was saying this must be manipulation. They're running stops above here to sink it. I also mentioned that if I was invalidated, I wouldn't trade Monday, because based on how this closes, what's possible that can happen now is Monday can trade down and then respect this order block right here, and then price continues higher. And that would be perfectly fine because this is a this would have been a bullish order block. And let me see if I can stretch this out some more so you can see what I'm talking about. And I'm going to take this box off now. All right, so ICT breaker, daily ICT breaker is right here. Do you see it? Right inside here. So if I was to focus on this green candle alone, right there, what we have is we have a low being formed here after structure break. Then price raids these lows, tags the order block, then it breaks structure again to the upside. So we have a range in here where, let me see if I can draw this. So it looks like this. Let's put it here. So there's a drop. And then it raids that high. Then that low gets raided. Then it trades back up here. When this low gets raided again, I mean, this structure is what most persons are going to say lower highs, lower lows, so it's bearish. But this leg trades down into a bullish order block that was right here. Then we see structure break to the upside, like this. So then this becomes ICT breaker pattern, where you look for inside here, the breaker inside here. If it's respected, you expect bullish momentum or bullish price action. So if you look right here, we see the low here, then it rallies, takes out the high, then the low gets broken, trades up inside of this low, forms a breakout, tanks, and then it closes above the breakout, comes back down, hits the breaker, forms a bullish order block at the breaker, then it trades higher. So now you have to consider this. Doesn't matter if you're a bull or a bear, you have to consider that this is now a bullish order block. And it's a perfectly logical bullish order block because it was formed inside a bullish breaker. So this is fine. So now if price trades down here and it doesn't close below here, like if Monday does this, then Tuesday might wick inside the body again and then this just flies. And that would be perfectly fine. My bias would be to trade bullish DXY or just do nothing. But if this gets violated, then I'm looking at all of this down here. All of this down here becomes my focus. And I'd love to see a deeper push inside of this order block.
So it's not necessarily about it breaking the structure. It's more about, is it going to keep breaking the structure? Because what I'm seeing from that little diagram over there off the side with the blue lines, is it did break the structure, but it did end up going back up anyway. So it's not necessarily about it breaking the structure. It's about what it does after it breaks the structure.
Well, yes and no. So look at it this way. Price and time, when they're working together, there's a range of time and there are reference points in price. So on the daily chart, it gives you a range. So that's a daily range. And then for reference points, now you look at where the reference points are. But for your reference points, they must be clearly defined. It shouldn't be a case where price is trading high, and then it forms a bullish order block here, then it breaks it, and then you're looking for price to close above this bullish order block again. So it's where inside of the daily range are the reference points being formed. So in this case, we have the low, the high gets rated here, the structure break, or the structure getting broken here. So now I have my range and I'm just looking at reference points. This one right here, and this one right here.
One question here. You said structure is broken on the downside. There is a confusion always I'm having with regards to the structure break and liquidity hunt. Isn't this that there is a equal lows, and before that, after that price just taking those equal lows?
Pull the arrows for the diagram you draw over the side and put it on the price action so them can see it clearer.
Just click on it and it will move.
Yeah. You just lift it up and move it on the structure so they can see it clearer.
Okay.
Tio.
So that's what I'm looking at here. That's that leg.
Still, it is bullish, right? Not bearish.
At the moment, it's in a range. It's in a range, but there are bullish reference points being respected. So this is why I'm saying I need to see what Monday does.
Yeah, what I was thinking, this is the liquidity hunt, which is this candle done based on this order block, 50% of the order block. And this is rather a liquidity hunt, rather a BOS, and it will again bounce back here in the H4 and may go bullish. That is what at the moment I'm thinking, because I'm seeing this equal lows, this thing, and this candle coming here is the liquidity hunt. We can say this as a breakout structure, but that is always a confusion to me. What is a breakout structure? What is a liquidity hunt?
Okay, understand.
Breakout structure usually happens before a liquidity, during a liquidity hunt. After a liquidity hunt, rather.
So if we say like that, then in that scenario, this can this be the liquidity hunt, and this be the liquidity hunt, and this is the breakout structure?
It's a possibility. It's a breakout. That's why he highlighted it. It's a breakout structure.
Yeah, right. Got it.
It's a breaker.
All right.
Yeah,
so
exactly.
Here's something that you want to, I mean, when we just start trading, everyone is saying that you should know exactly what price is going to do next. I try to not do that. I try to create rules that tells me if I should engage in this market. So for instance, if I'm going to entertain any bearish ideas on Friday, which was NFP day, this green candle, we can't close above it, which is why I bought gold, because it didn't close above it. So I waited. Even though I was bearish, I didn't just, at the start of the day, I started buying gold or buying anything, because that's crazy. It's always better to find a way to pair your orders. Remember, we don't move the markets, but what we do is we understand that the guys who move the market, somebody needs to mute. So what we understand is that the guys who move the market, they have a particular method of operation. If they're going to be driving the market lower, they're going to take out stop some of the persons that are up here first. So even though I was bearish, I had no intention of trading NFP, but we were in the lab talking, and based on the price action, I was like, all right, this is clearly a manipulation. The time of day, the structure of the candles, everything was not supporting a bullish bias. So that's why I bought gold when it was trading low. So even though from here to here is my range of opportunity, there is no confirmation for me to just start trading right here, because then I'd have to suffer through all of this drawdown. And that's what lower time frames are for. I know what my bias is. I know what direction I want to go. I just need to find where to enter. So I have the range. Now I need my reference point in price. That reference point is this high right here. All right, so we know that stops are up here. The structure was broken. Go ahead with your question.
Is that because it's the only level off plane before the market actually closed?
No. So here's how I personally look at breakout structures and turning points, especially if they're on higher time frame. if this is a high that's formed and the market is bullish, it's going to continue pushing through this, right? And I don't mean one candle. It should continue pushing through. So the fact that this was a shallow run above here, and then we close below it immediately, I'm thinking that this is a stop on. Just look at how aggressively we moved away from up here.
Yeah, that's what I was asking.
Yeah, so I'm saying, if this is bullish, why are they moving so aggressively away from the high? One of two reasons. They're taking out persons who got in late on the bullish move, because this move started way down here, all the way down here, all right? So in relation to the range, if we just look at this alone, from here to here as the range, this is deep inside premium, right? This is deep inside a bulls buy low, bear sell high, and then pigs get slaughtered in the middle. So I'm not looking at this low to buy. I'd much rather buy a raid of these lows, because persons who got in here and they're holding for price to continue going higher, their stops are going to be somewhere here, especially once we close above this high. They're moving their stops to break even and they're letting it run.
So because you're seeing that the market never gave any indication of selling, you initially bought, but now you're seeing it doing like extremely aggressive sells out of nowhere. So now you have no idea where it's going on Monday.
It's well, yes, but my thought process when I'm looking at this kind of structure is simple. I don't want to be a trader here. I'd be a trader at the low or at the high. If I'm looking at setups in the middle, I'm not trying to be a trader. I'm trying to liquidate traders. So their stop losses become my entry. So I'm looking at entering when this gets rated, and I'm looking at entering when this gets rated, which is why I bought gold when the XY rated the high and gold was rating 17, 85, 86 thereabout.
Okay.
So that's a personal rule. If I'm at the low of the range, I'm looking at longs. I'm trading down here and I'm trading up here. In here, I'm helping to slaughter the pigs that are trading. So I'm looking for where their stops are going to be, and I'm waiting for price to trade to their stops. And then as soon as I'm seeing a confirmed breaker structure on a lower time frame, I'm in. Okay.
You can answer the question in the chat, please.
Oh, sorry, I didn't look at the chat. Let's see. If, for example, I decide that I want to be a scalper, I still must have first analyze higher time frame, right? I can't trade. Okay. If you are a scalper, the only thing you need from the higher time frame is direction, nothing else. Because scalpers don't trade like you're not going to be holding it all day. You want a direction so you know which trades you will hold for shorter targets and which trades you'll hold for a longer target. So let's go inside of this down candle here and look at it from a scalper's perspective. I think we have 3 minutes left. This is not a paid Zoom. This is free Zoom. Oh, wait. I think you said I could click here to reset. Cool. So this is now a 5-minute chart, right? This is our area. This is our area of opportunity, these two black lines. If I'm scalping and I'm bearish, I know that I'm going to be shorting at the high. So it's the same idea that I'm going to employ here right now. I'm going to look at this as the first high that was created. This is the stop point. When price trades back up to here, I don't want to see it close above this candle, this green candle. So I'm looking to short up here. So you can do that in one of two ways. You can be aggressive, and then once this candle is trading up inside here, the moment this happens, you go short, stops above here. You accept the risk, so you don't put on a big lot size and hope. You just manage the risk, wait, put your stops there. Or you can wait for this bearish order block to get formed. Then you wait for price to trade below it. So let's put it there. Once we trade below that, you're gonna sell this and put your stops above there. Either one is fine, your choice.
I have a question. How do you know when the chart is being manipulated? Is it something like what you're seeing right now where it was steadily going up and then sales came out of nowhere?
So you look for, remember what I said earlier. All right. If I'm trading at the low, I'm a trader. If I'm trading at the high, I'm a trader. Anywhere else, I'm looking for traders to get liquidated. I want to know where traders would likely put their stop losses. Guys, somebody needs to mute.
Joseph.
So up here, I can see that stops were taken here and then it moved away aggressively. So even if I'm wrong, based on my rules, stops were taken, structure was broken. So this is a trade I'd put money on. And if you trade the pattern called stop hunt breaking market structure RTO, you can see that this is the stop hunt, this is the breaking market structure because it took out this low, and this is the RTO. So it's the same pattern, but then when you understand what to look for, it helps you to refine your entries. So I guess that's it for this one. I have a minute left.
Really quickly, can you go back in this range? Show me where did you identify the range at?
Guys, can you mute, please? Oh, what was your question?
Could you go back like those two range lines? Could you identify which candle you put that on?
This one right here?
Yeah, those two, like the top and bottom, like where you found that range at?
They were taken from the daily time frame. Where is that refresh thing?
Is it the last? Oh,
I don't know what I'm doing now. This chart. Do I click refresh again, or do I have to drag it down?
you can just click on the middle and drag it across.
That's what I'm doing.
It might be just
So
slow.
really, it's this order block right here, and then this high. But initially, it's this bearish order block. See if I can show you that before it cuts off. I have no idea why this started doing this, and I can't fix it. But this order block, I think I have it outlined in the chat, in the Telegram. So this order block, and then the highest green candle that's right there.
Okay, thanks.